Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Thank you for joining us today in this live webinar where we take a look at the market structure on this 19th of January 2016. Before we dive into today's topic, though, and take a look at the Forex market and other instruments, be aware that this webinar is intended for or is shown to a global audience, but may not be suitable for everyone. Take a look at this link, select your country of residence, and contact the appropriate entity to find out more about that and other details and conditions. Also, please be aware that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer, plus you're aware of the risk involved when trading. All right, thank you for your attention on that. Just in case you're not aware, MetaTrader 4 Supreme Edition has 60 additional features that make your trading life a lot easier, like alarm manager and some other cool stuff like matrices here about currencies, how much they're correlated, sentiment traders indicating the positions of traders, and a money management box that calculates the lot size as well. And that saves a lot of headache regarding calculating that by heart. Also, we got a web trader edition or version where you can trade basically the markets from the browser, so you don't even need the software necessarily. So that's also a big plus, and I'll show you that. Actually, I can show you that in a second. But before we do that, let's take a look at what's going on in the market regarding the calendar. We had some China data here, growth rate. Excuse me. We have inflation rate on the pound. That's always, of course, interesting. Core inflation rate, core inflation rate, excuse me, and economic sentiment on the German side, and some dollar news. Okay, so we got some stuff going on on euro and pound, dollar, some minor news, I should say. With that said, let me take a look at what type of currency pairs have the bigger movement. We can take a look at the market heat map and see what kind of volatility is expected. Let me also check if the sound is working. Good morning, Bondo. Good morning, everyone. Just want to check if the sound is okay. All right, yesterday, great, thanks guys and girls. So, well, we had a flat day when looking at this, pretty interesting, right? Nothing really going beyond the 0.5 up and beyond 0.3 down. So it was a heartbeat day. What does that mean? Basically, price going up and down a lot, but not showing a lot of consistency in one direction. What I mean with heartbeat is like up, down like this, but eventually ending kind of roughly around the same as the starting spot. But we did have a lot of volatility on the usuals here, which is the euro odd, pound New Zealand, and a lot of pound pairs, in fact. Pound, definitely the number one. All right, good to know. So let's take a look at the currency pairs. I want to take a look at market structure. So I want to take a good look at some trends that are forming. I think there's going to be some interesting things to discuss. I think especially the Aussie I want to talk about as well. I think there could be some interesting decision points within the next 6 weeks, this or next month. So that's going to be, I think, pretty exciting, and I want to talk about that. What kind of opportunities I think there are. By the way, if you were interested in that browser, you just go to trading platforms/web trader, and you only have to do is click launch and then log in. And you can access graphs, drawings, you can do your technicals here, and insert indicators as well. And maybe not as many as on the MT4, but a few at least. And you can, more importantly, trade. And manage the trades. All right. So we're about halfway this month of January, and I think that there could be some exciting stuff starting this year. Let's see, there it is. Let's first start with the majors. All right, your dollar wasn't able to break this top layer at 110 last week, and it's basically most of the price action is between 108 and 110, and now it's just a bit below halfway. There are a couple of trend lines here that could act as support, but so far price not respecting this level, but still breaking down. Wasn't able to break above this resistance spot. That was the one I was looking for an upside break, but that didn't happen, and actually price is still pushing lower. I think that if we look at the 108 bottom here, that is still something that is an important level, and as price gets closer, I don't think shorts are that interesting right into that bottom and even right into these trend lines with a 78.6 fib pretty close by. So to me, it's more of a potential bouncing spot than something I want to short into. Now, of course, we never know exactly. The point is not to know every single bit. It could break, I'm not saying. It's just that right now, I don't think it makes sense to trade it down to the downside. And if it does move down, then that's tough luck, and I don't mind skipping that. Especially with the 78.6 fib, obviously price respected roughly these fibs already. Even the 50 a bit, especially the 61.8, obviously. So price respects these fibs. It's just causing a small little correction before price still moves lower. But with that kind of trend or pattern in mind, I think the 78.6 fib would be a support level as well. And price came about 14 pips shy, so probably could move a bit lower still. But considering the fact that there's only about 20 pips from here to there, and the risk is certainly a lot bigger because the risk would have to be a very minimum above 109.5, and you're looking at about 40 pip risk. So I'm not going to risk 40 pips to make 20. And I would rather look for a bounce at the 78.6 fib, potentially. Now that 78.6 fib, a bounce there, in a way, is already as well a bit risky because price broke through these support trend lines, right? So from that point of view, it's already in a bit of a, let's say, neutral territory. If price would have bounced off these trend lines, it was still an uptrend or slight uptrend within this correction, right? And that's the trade I was actually looking for, right? To break above this orange trend line here. But it didn't happen, all right? So once again, to put it in perspective, all of this is really kind of very choppy and consolidating price action. This is a very tight range and therefore not very interesting chart at the moment. So just bear that in mind. I'm just talking about this euro dollar because it's the euro dollar. If this were beyond New Zealand, I would right away skip it because it's just in a sideways zone and I wouldn't be interested in trading it. But because it's the euro dollar and everyone looks at it, I'm analyzing it and trying to see if there's some trade. But just bear in mind that it is a very sideways zone between 108 and 110, tight, 200 pips, lasting already 6 weeks. As I said in yesterday's recap video, which you can find in the wave analysis section, is the fact that my bias is still bullish. I'm still expecting a break above 1010 to go up to the minus 272 target, the green one. Let me get rid of this pink one. So my buy is still a break above 110, and it could be a break, pullback, go here like that, for instance, up to 112. That's what I'm expecting. But I also said yesterday that if price breaks through 108, support level, I should make that green actually, there could be a bigger correction to the downside. This could be one leg, this could be a second leg, this could be maybe an A or a W correction, and this could be a B, and then this could be the C, and fall down to the 78.6 fib here at 106.35 and then bounce probably. So 110, 108 are important. When 108 breaks, there's space down to 106.35, which could be a bouncing spot again. If 110 breaks, I think there's space to 112, which is the minus 272 target. And that could be a corrective spot again as well. So this is what I'm keeping an eye on, these two levels for that bearish break or bullish break with the subsequent targets. And if, well, basically I'm not expecting a break of this bottom as yet. If we look even longer term, then a break of those bottoms, this bottom and the 104, last year's low basically at 104.60-ish, if that breaks, well then we got a downtrend continuation of the euro dollar on the weekly and monthly chart. And I do expect that at one point, but as I said in earlier webinars, I expect that maybe in April, May, June, but not so much this month, next month, or even March. I would not expect that to happen in the next 3 months. And that has to do with time factor when looking at the monthly chart. All right. So assuming that bottom will not break the next 3 months, the 105.20 is not going to break. That's why I think price will rather bounce at the 78 point or 88.6 fib if it gets there. So in the meantime, price is not breaking above 110 or 108. So let's go back down. Is there anything to trade within this zone? Because it might not break, it might bounce again. It might keep bouncing between these levels for yet another 1, 2, 3 times, who knows? And as I said, maybe if it reaches one of these fibs and bounces. Or maybe even the bottom, because as we know, fibs work best if there's a trend. And can we say that the 4-hour chart is really trending? No. So maybe I shouldn't even use this fib, and just keep an eye on the levels roughly here, around these support levels right there. Let me get rid of this fib. All right, so from that point of view, the better trade seems to be along from here. You can still keep the fib on just for informational purposes. I'm just taking it off for clarity purposes to show charts easier. And then last but not least, the last question, is this an interesting break, yes or no? And my answer, I think, is still no. I think that, let me put on the fractal. I don't think it's worth it with two fractals that close here. So no, for me, it's not worth it. I think the chance of a bounce back is too high. If you look at the moving averages, they're intertwined, they're flat. When that happens, basically, they're actually become a pull on price. Price actually gravitates back to them. They're like gravity. So when price tries to escape from, it's going to be difficult for them to actually move away substantially. So when moving averages are that flat, when they're trying to move away, more often than not, they're going to go. It's not going to last that long. So no, I'm not interested in this short, but I would be in the bounce. That's my conclusion. So let me know if you have questions. Otherwise, I'm going to move on. Pound USD is making a great downtrend. This is amazing, beautifully to see. And it's fallen about 1,000 pips in the meantime after the break and acceleration. We talked about this already for a while, saying that this is a good downtrend, perhaps, but we do need a bit of an acceleration, breaking support to really give a good angle to this pound USD, to give it a bit of a boost of this downtrend. And yes, the support level broke, and that's when the 1,000 pip fall started. One bearish daily candle after another, and it hasn't stopped as yet. And this has lasted all the way since the end of December. So beautiful impulse on the daily chart happening. And at the moment, with a weekly candle like last week, fully below the bottom here, with an acceleration as we've seen, for those that like a bit of waves, this is got to be some type of wave 3 probably, which means that at the very minimum we're going to have a wave 4 and a wave 5 at the very minimum, if not a bit more. So I don't see any big potential for a substantial retracement. Will there be some retracement? Yes, sure, for a wave 4 at least, right? But those are always typically quite shallow. So no, I don't expect a big bounce, but maybe a small bounce. Let's talk about that a bit more. Let me get rid of these lines. These are a bit annoying me. All right. So how far could this trend go? Well, we got 140 psychological level. Got to be aware of that as well, of course. Obviously, price was still up about 150, almost 160 here about a half a year ago, and now is reaching 140. So that's definitely in the meantime an interesting drop. It took a few months, but still. So target is 138.50 minus 272 target, and then after that 130. Well, anyhow, that's a bit far from here, but point is 138.50 is the main target. 138.50. Let's take a look at this bottom as well because we got to look at the monthlies. Yeah, that target is above this monthly bottom. Great. So that's the first thing to think of: 140 and 138.50. So we're at almost at 143. So still plenty of space left, I would say. When we look at the weekly candles, would not expect last week's high to be broken. That's also the bottom here on the left. That should be resistance now. No reason for price to break above that. So when we keep that orange line in mind, we can put a fib on any of these swing highs, swing lows, but let's take the most recent one here. That would give 23.6 fib of 44.70, 144.70. But maybe we can even use a 4-hour chart, and we could even use maybe a smaller swing, like for instance this swing. And I'm not sure about that swing actually, because there's divergence between this bottom and this bottom. And if this is a wave 3, it shouldn't have divergence. So I don't think that that's a good fib. But the 38.2 fib around 140 as well. So, but I will not use it. But just it does give confluence there at 145. All right, 145. So we'll keep an eye on 144.70, 145. Let's keep that in mind. All right, going back to the 4-hour chart. All right, that would be the target if this purple line breaks and the orange moving average breaks, which is a 21 EMA. If that breaks, price could rally up to 144.70, 145, then find resistance for a turnaround. If that line breaks. If that line doesn't break, it's actually retracing now for yet another potential short, I would say. Just off that trend line and off these bottoms here. This one could fill, I'm not saying, but if you look at the strength of this trend, it has kept pushing through the support trend lines, keep breaking through mini corrections like this, one after another. Eventually it's going to stop. I'm not saying. Eventually it might make that bigger pullback to 144.70, 145, which is about 200 pips higher. But will it be now or the next one? It could be easily the next one. I don't think it has to be this one. There's only a single divergence here, which I don't think is a lot considering the strength of the trend. So I think that if it pulls back up to the 38.2 fib or the 50, it could still be a good shorting zone. I talked yesterday in the video about these 3 fibs, stopped at the 38.2 fib. And I think that these fibs are still very much valid as resistance, any of these 3 in fact, even the 61.8, even if it pokes a bit through that trend line, I'm not worried about that because we got horizontal resistance there as well. We got bottoms here and we got a bit of a supply demand zone right there. So as long as price stays below the 143.50, I think it's in bearish territory. If it breaks above 143.50, if it does something like this, for instance, and that makes a bull flag. Well, then there's a potential ABC reversal zigzag that can take price up to that 144, 70, 145 we were talking about. So what am I interested in? I'm interested in not trading it here long because it's a downtrend. I'm interested in trading it to the downside as it reaches this zone, and I want to see some reaction to the zone on an hourly, I guess, or even it's on a 4-hour chart. Any of these two, maybe even the lower time frame, some price action, probably price action on 1 or 4-hour. And if I look at a lower time frame, I would probably use time factor, which means 5 to 6 candles, not breaking this impulse, because at the moment we got a bullish impulse on the 15-minute chart, and not sure how far this will last. Will this impulse bring price up to those higher levels? Yes or no? We don't know. But if it does, this is already a pretty big impulse. And if it does reach higher, it's going to be even a bigger impulse. So what I'll be looking for is kind of 5 to 6 candles not breaking the high. There'll be some kind of, probably some head and shoulders pattern developing, and we'll get something like this, and then we'll get like that, right? So once you get like the weakness here on the right side on a 50-minute chart, that could be an interesting short. But it's something that could be a bit tricky because you don't want to short it too soon here, and the 50-minute impulse still pushes it higher. So I think we want to see some, at least a multiple 5-minute divergence. We don't have that at all, probably 2, which means we'll probably see price move up here, I move up here, I move up here, double, triple divergence, making it a channel like that or something like that, double divergence, and then some head and shoulders pattern, 5 to 6 candles not breaking the top, making that right shoulder, and then either the break there or the shoulder itself could be, or the break pullback even later on, even this one could all be short potentials there. Once again, we're trading against the trend on the 5 or 15, but we obviously have the trend on our side on the 1 hour, 4 hour. Or there's no trend even on this. It's not really a trend on the 15, it's an impulse on the 15, right? So that I think is a good trade. I think that the trend is on our side, and I think there's a decent reward to risk if I go above the 61.8, or if I go above the head and shoulders pattern and I target 142 minus 272 target, or minus 61.8, 141.38. Or I could even, as we know, even target minus 100, as long as I think the target is above 140. I think it should be, it's understandable to have that as a target. So yeah, I think that makes sense. If you have any questions, let me know. But we keep an eye on 4 1 hour, 50-minute charts. Let me see if I can quickly take a look at these fibs, and I'll move on to a new pair. Yeah, I just wanted to look at the bigger fibs, okay? And I think from this point of view, if I use the method of fibbing from retracement to target, the minus 61.8 target, before moving the fib, then what I see is a minus 61.8 target at 141.70. So I think we're at the minus 272 target. That's why we're getting a bit of a more retracement perhaps. So what I see is price potential to minus 61.8 target. Let's take a look. All right, that would be right in between those other targets, so there's not really much confluence there. But if I look at the fibs, probably 142 makes sense because there's a S2 today at a pivot point at 141.95. So yeah, I would probably, I mean 142. Sorry, these lower targets might happen tomorrow. Maybe price goes up today, then makes this, that makes a bit of a bear flag, and then finishes it tomorrow with divergence, and then makes a bigger upside. For instance, right? So I would probably today aim for 142 and not probably lower than that. All right, so let's see how price looks like when it gets up here. Okay, keep an eye on it. Let's move over dollar yen, and then I'll take a look at the Kiwi Ligia. Is bouncing off the bottom that we talked about, very important bottom off this monthly chart. And good morning, Beverly. Good to see you. No problem at all. You didn't miss much. We just looked at the euro dollar. The only thing I thought was interesting, if it bounces from 108, or if it breaks 110 up to 112, or if it breaks 108, basically down to 106.35. Pound USD, I think you just heard. I'm looking for shorts somewhere around these fibs, right? These three, for a turnaround, waiting for confirmation on price action, for a turnaround down to 142. So let's see. And if it breaks above 143.50, then maybe a zigzag up to 144.70, 145. These support levels, very important price. Basically 1, 2, 3, 4, 5, 6 day already, not breaking that bottom. And it's going to be interesting to see if it breaks this trend line. If it does, there could be a bit of a bigger correction here. And price could maybe correct part of this downside here. Let's see, price, for instance, 50 fib looks neat, 120. Obviously, that could be a psychological level too. So that could be the target for upside break. It is counter trend and reversal. So I don't know, doesn't look something like I would really be jumping for Georgia trade, but it's something to consider perhaps. Let me take a look at, yeah, maybe, let's see. I don't know. If it breaks, pullbacks, and shows some continuation, I might consider longs on the lower time frame around that blue circle there. So it's something to keep an eye on. And price, don't get me wrong, could stop at the 38.2 fib, right? Make a bit of a bull flag perhaps, then move up to that 50. The 50 looks the strongest. If I had to make a guesstimate which fib would be the strongest, it looks like the 50 just because of the 120 level. But let's see, the 38.2 has a moving average as well. So, we got to be respective that any of these fibs could really be acting strongly. Now, will price really turn a lot at these fibs? We got to really look at the higher time frame. What do we see here? Got big support, big resistance up in here, but we also have a big trendline break. When you look at this big trend line here, a weekly, monthly support trend line that's broken. So yes, I do think that this move up could very well be a pullback for more downside. So any longs, I don't think should aim for more than the 78.6 fib at the very max, I think, because there's a trend line as well and a pullback trend line. So you got two trend lines up in here. So I don't think this top will break. I don't see it. But if it does, and dollar is really that powerful, then that might be the uptrend again, of course, which would be great, but I don't see it happening. Unless not, at least not in the next 3 months, because as I said, also on the euro dollar, I'm expecting dollar strength a bit later this year. So let's see. These are the key levels I'm keeping an eye on a pullback, and then the price can make that fall, I think, down to 114, which is the minus 272 target. Well, let's put the fib a bit bigger. Let's put the fib on this swing high, swing low. And we got 113.60, right? 58. minus 272 target. That could be a bouncing spot, or even 110. I know it seems very, very far from here, perhaps difficult to conceive with the dollar yen, being in such a big uptrend, but those could be the two targets after which the uptrend could very well continue. Because if you then look even larger, I don't want to bore you with all these degrees of things we're looking at, but ultimately this could just be a correction. Because if you look at this monthly chart, um, this has not touched the 21 EMA in about 3 years. Now it's finally doing so. So this could easily be a retracement on the monthly, after which we got still a monthly continuation like this. So all in all, something like this would not surprise me. I know that's a far picture here, but far future development, but that's what I'm thinking at the moment. But for the short term, basically, it's all about this fib, I think, and the continuation down to the 272 target. For the long term, I do expect this to become some kind of a bigger bull flag in a way, bounce off the support, and once this bull flag breaks, then the uptrend might continue. Let's see. I got two questions here. Let me go address that, and we'll take a look at other currency pairs. Definitely the Kiwi dollar, but I also want to show you the euro odd and pound odd. I think that was, really going to be an interesting spot. Let's see. Beverly took, first of all, in the dollar, and Beverly took a small position long. Let's see, yesterday sometime, but low risk, great, perfect. I love it when the trade is low risk or it's break even. That's the best. But you still have to have that patience at the beginning to keep the risk on, because moving it right away out of risk is probably going to be killing the trade. But once there's a good reason to do it, um, then that's really very nice. If you're wondering what is a good reason, you can take a look at the Admiral Markets YouTube channel. Sorry, small promotion maybe in between. Go to Admiral Markets YouTube channel. This one is actually the Dutch one, but and take a look at this is not the right one either. Wait. Take a look at the recent video on trade management. Sorry about this, it's taking longer than I. Let's see, it should be here somewhere. Strange. Yeah, that's true, Caitlin. Very good marketing from them. Or SEO, or let's see. This is getting annoying. Sorry, has to be somewhere here. Here. Pro Learning Lab. There it is. Trade management. So you can find out more about that there. So that's great. Anyhow, sorry about that. Let's see. Waves looking for a trend continuation soon. If this is a small wave, counter trend against all pairs. And yeah, that probably would need to know which time frame. You mean like the very big trend continuation on the monthly, weekly chart? Wait, is that what you mean? Or do you mean the downtrend continuation here on the 4-hour daily? So you're probably seeing this, right? You mean trend continuation like that? This is to break the impulse. You're looking for a correction here and then down again. Yeah, cool. Great. So we got confluence there. Let's see. Beverly has a target of 120.35. Makes sense. I think any of these fibs could be good, but in my opinion, as I said, somehow, why did I like this 120 a bit more because of the 50 fib? And let's take a look at pound USD. We got a question from Rich. Let's see, Richard, is there overlapping fibs on 1 hour? Not sure what you mean with the question in general, actually. There are two fibs here. One is a 4-hour fib, the pink one. And the green one is an hourly. And you can see really 15 5-minute chart is really getting a lot of boost, a lot of momentum here. But that's don't forget, it's counter trend. This is not with the trend. This is counter trend momentum. But on a 5-minute chart, it looks very impressive. On an hourly chart, it just looks like a small pullback. So let's see, it's getting close to the area of interest. So that's good. All right, let's take a look at the Kiwi now. Sorry about that. Let's continue with this New Zealand USD. All right, I think we got a pretty, let me get rid of this fib here. Pretty good break. All right, 1 second. There we go. So we got a good break of various support trend lines like this one and this one. Bit of a double top and price moving down pretty quickly. And on a weekly chart, you can see price trying to break through this this weekly bottom, this fractal here. And it's been a good correction. If you look at the monthly, this is 1, 2, 3, 4, 5. So this is going to be quite a similar kind of view as on the euro out and pound out. That's the ones I wanted to show you. The Kiwi is showing kind of the same thing. This has been a long and strong monthly impulse. And the impulses always look the same. It doesn't really matter on the time frame. This is a monthly chart, bearish impulse. But if you look at the 5-minute chart on a pound USD, right, impulse looking pretty much the same. There's no difference in that. So this has lasted a good number of pips too, 2,500. And is this impulse over, or is it still on? And that I use, one of the things I use is time factor, and I want to see a continuation of the impulse within 5 to 6 candles. This is candle number 5. January is candle number 5. Next month is candle number 6. So I want to see within these two candles this bottom break. And if it does, then this bearish impulse is still good and well. And if this is good and well, then let's see what kind of targets there could be. Wei is talking about 58 or 59. So there are a few things we can do. We can put a fib on like this and see, is this fib respected? Does the price use it? We see it stop at the 38.2 fib, not so much 50, a bit at the 61.8. So the 78.6 fib would be 57.30. That's maybe a first indication we could use. We could put a fib on downside as well and see what kind of targets we have. And I'm using this on the monthly chart because that's where the fractals are in this case, but it could be a bit different on the weekly and daily. That's why we see probably price, bouncing so strongly at the minus 61.8 target there after going up to the 38.2 here. So let's move the fib because we hit the target. Price stopping at the 38.2 fib, target at 58.25. So 58.25 is the first minus 272 target on this this chart. So from that point of view, it's got a couple of weeks still left to break this bottom, and then it could, continue down for another few hundred pips there, at least, if not perhaps lower, right? It could go to the next target as well. All right, looking at the candles here, we got two bearish candles. And this looks like a second dip below the 21 EMA band. We got one attempt here to break above it, two here. We got one break below it here and a second break here. What does that mean? That means those greens look like retracements. If there were to be a bigger reversal here, I think that the green 2 would have had to gone deeper, but it didn't. The 21 EMA band stopped it. So those are the two attempts, but it didn't make it. And especially the second attempt, typically if there is a bigger reversal, would be the one that makes it. So this is looking like this is looking like a breakout now to the downside, in my opinion, and it has the impulse on its side because it's still within six months. Let's see when this break is happening. This break is happening on candle number 18. That's fine as well. So I think it looks bearish. The question is it a good short now? And if I look at the daily, it looks like a typical breakout. And I would like to have a pullback here before continuation. There are a couple of things why I would like that. First of all, the daily chart has made a good run down without any substantial pullback here. So I think there has to be, some squaring up to do here. We got a trend line break as well. Typically, price does go a bit back to the trend line. And also, if you look at the moving averages on a weekly, there's a good chance that price will go back to the 21 EMA band and then break like this. That's what you often see when price tries to move away from the 21 EMA band. Doesn't always, not always, but let's take a look. Maybe give some examples here. Price going back to the 21, but I'm looking for the break actually. Here it breaks, still hooks back, right? Here there was no hook back, there was just one continuation as well. So, but there was a bit of a difference here that there was only one. This was only one pullback. Here got two. I think that still makes more sense to wait for a bit of a pullback on this time frame. This fib like this, and you hook back to the 38.2 fib or 50. I think could be great shorting areas for downside. Or even this 23.6 fib could be the bouncing spot too. But it's not something I'm really looking to trade. In that case, if it does bounce like that, I'll try to catch it differently. I'll try to catch the breakout. Because this is a very shallow fib. The 23.6 fib is very shallow. So if it doesn't break above this, for whatever reason doesn't break above it, and this level caps it, stops it at 65, psychological round level as well, then I think that we'll get a trend line like this. We already have two hits. We'll probably see price do something like this, I guess, and then we'll have to take the break. The other scenario is that price would get up to these fibs and then turn around, and those would be interesting shorting zones too, because of the fibs and the impulse, downtrend, moving averages, trend lines. So those are the three things I'll be looking for on this Kiwi. Let's take a look at the Euro. Now the Euro has the same monthly picture, in fact. 1, 2, 3, 4, fifth candle. So if this is a big bullish candle like this, then the momentum could still be very much alive. The momentum that we had here. And if there's a substantial wick, more than half the candle at least, I would say, or even 40% of the candle, there's a substantial wick here and the candle looks something like this, well, if it's some candle like that, what I have on the right there, the green arrow below it, and that's a fifth candle, then I think that there could be some serious struggle and trouble maybe for the Euro odd upside. I don't know. It doesn't look that good. Of course, if it doesn't close like that, and if it looks something like what it looks now, then maybe we'll get the uptrend continuation. So it's going to be interesting. It's going to have to be very interesting to see how this month candle closes in next month to see which of the two is going to be more likely. On a weekly chart, we talked about this already, the potential for a retracement of this bullish move up, and it nicely hit the 50 fib, moved up to the target, and reached the target recently, last week. So that was a good move from 50 to the 61.8 target. So what's it going to go do at this target? Is it going to make a bit of a hook back here like this and then break, or is it going to be just like a bull flag and upside continuation? Let's take a look at the daily. And I'm going to move this fib. We know that the target has been hit. And we're going to fib this breakout here like this. This is, I would say, let's say the master fib at the moment. So we got this playing field. We got the break of this trend line, the dotted orange, and we basically are curious. I think from a wave perspective, is this an ABC correction, or is this a 1, 2, 3? Now, if it is a 1, 2, 3, then this should go further. If it's an ABC, then probably there's going to be a hook back and failure. So I'm going to use time factor again on this daily chart. If 5 to 6 candles is not breaking this top, then I would say it's a fair observation that this is more looking like an ABC. And that increases the chance that there's going to be a bigger correction to the downside on the Eurod. If this is a 1, 2, 3, then the upside should happen within the next days, and this should keep pushing up like this. And this top will be broken within the next 6 weeks. Now, let's see. Way's asking, how do you determine a truncated wave 5 as a versus a wave B? Yeah, that's a good question. There's really, as far as I know, at the top of my head, not something that this is a fixed rule here that can help you with that. I think it's a question of looking at the larger picture and trying to look at the other waves to see, which one of those two is more likely for that wave. I think it's the context. I don't think there's any rule for just looking at that part. But I'm open to anyone who suggests differently. But as far as I know, I think it's context. So now there are a couple of ways we can look at it. This could be 1, 2, 3, 4, 5 already, and that could finish an A or finish a 1 by itself, right? And this could be a wave 2. So there are ways of looking at it differently. I'm not saying this is the only way, but for me, if this does not break basically within 5 to 6 days, then it looks like there's a potential for some kind of head and shoulders here as well. Price could move down, bounce back up, make kind of a head and shoulders, and then I would say there's a chance of a reversal trade below this blue line right there. And then we have this momentum already going our way. That could be a correction, and then we could get this momentum. So that's a potential scenario if we get that failure. That could be an interesting trade to the downside, I think. But not this week, as you can see. Next week, probably, if it indeed happens. Let me zoom out here a bit. All right, we got a couple of trend lines here as well. Right, so basically, even if we get a mini head and shoulders here, and we break this trend line, as you can see, a break of this trend line here, like that, this downside on the daily chart, remember we're talking about this downside, basically it could still be a correction of one more upside because we got a weekly support line still close by. So this break to the downside here is not a big reversal, it's a big correction. It would have to break the next trend line before you get a big reversal, because that trend line would then really be the bigger one. So this one, we're talking about this space right in here. That's small. Once the other trend line breaks, the bigger purple one, then you get the bigger space to the downside. All right, and then this was down. This is maybe a correction, and then you get this potential to retest this bottom. See that? That's a big space to the downside on the monthly and weekly. And on the daily, this is just actually, this small little head and shoulders here with the downside down to that support, weekly support. This is still a relatively small trade, but the daily could be a good amount. Now, what if price does break this top? Well, then I'll be trading it on a lower time frame, and I'll trade it up to the minus 272 target at 164 on a 15 and hourly chart, because the 272 target is equal to this top too. Once it breaks that top, this top, what do we have? What do we have left then? Let's take a look at the weekly. In that case, let's see. Let me get rid of this. Let's take a look at these fibs. What do we have then? Put a fib on a monthly. We stopped at the 50 fib. So then we could have an upside up to the 61.8 fib at 175. So if it breaks once this top, we got space up to 175. And I don't know how it will go. It could be slow. I'm not saying it could be something like this, but that would be my target then. I wouldn't trade it probably because it's such a massive target, but that's the space that is maxable, kind of max allowable on from a higher time frame. So to the upside, once this break gives this trade to 164. Break of this top, that gives space for some mini swings there up to 175. Failure here to continue, potential head and shoulders, break reversal down to support, which is then again a bounce or break spot. All right, so I'll leave those arrows on so you can take a look at that a bit better perhaps, but that's the playing field, what I see at least on Yard. I think it's an interesting spot because we got monthly chart being forced into, let's say, a decision point. And we got a good daily chart, I think, too, we can monitor to keep an eye on reversal here or continuation. So I think it's an interesting spot for potential up and down trades here. Now, all what I just said, I think could be equally valid for the pound odds. So I'm not going to go through all of that again for this pair. One of the differences is that the pound odd went up to the 61.8 fib, and you can't see that fib that well here. Here, this green 61.8, that's a monthly fib. So pound odd went a bit deeper than the euro odd. Euro odd went to the 50, remember. The pound odd also, if you look at this pink fib, I got two pink fibs here, 1 second. Price, if you look at the pink fib, then price made an impulse, retraced down to the 38.2 fib, and went up to the 61.8 target. So there was a good confluence here at those two golden ratio targets. What happened at the golden ratio? Price retraced and has been retracing down lower and lower in what looks like a potential bull flag, and price stopped at the 38.2 fib twice. So a breakout of this trend line cannot be ignored as well, and the break of that resistance there in this channel could lead to a breakout trade. easily. And that's an interesting setup as well. Whereas the euro odd has a momentum that is pushing against this top, the pound odd has a momentum too, but it's not reaching the top, it's reaching the top of a downtrend channel. So it's interesting, just a tad, so small differences here. So if it breaks, this channel breaks, there's, I think, good space up to what I would consider the next resistance zone, which is these two orange lines. Let me get rid of some of these fibs because it's becoming a bit too crowded. One second. Good. So yeah, I think we got a good breakout up to that orange zone, these orange trend lines. How will price react there? We don't know. It could be, again, if we get a bull flag, I think there's a chance for it to go to the top and re-challenge the top. Whereas if we get a good impulse like this and then we get a bear flag, we'll probably break this support trend line and go and break to the downside and reverse. So it really depends how price reacts to that resistance zone. But in the meantime, when it breaks, there's a good couple hundred pips there, 700 or so to the upside. Then it depends how price will respond to this level. We can put some trend lines on here. And basically, when I was talking about the reaction here of this price, it really depends. If it's a strong bearish impulse, it could do something like this, back to the trend line. And when that trend line breaks, we could get the bigger correction. Whereas if it moves up like this, as I said already, but then shows a bull flag, there could be the next move up. All right, let's go to the 4-hour chart. And now let me get rid of this fib because we already know that the price has hit the 38.2 fib here of this fib, so we can get rid of that. And let's take a look at this 4-hour chart a bit better now. You can see price making a triangle in a way right at the top of this channel with an impulse before it. So if price manages to break these tops and this trend line here, I think you get a good breakout trade there, which is tradable, I think, on hourly, maybe even and lower time frames too. And I think that if you put a fib on it from here to here, we got a minus 61.8 target that seems very qualified to aim for as a long-term target here. It's just below that orange zone we talked about already. And yeah, I think that we could see something like this up to the 27 bull flag up to the 61.8 target. Price stopping here at the 61.8 fib already and having a target there at the minus 61.8. All right, on the hourly, really not much to add. Really, it's on hourly it looks choppy, but that's just because we're seeing this part, this triangle, right? We're focusing on this triangle, so we're not going to see much extra. I think we're something new. I think the dominant feature of this part of price is that we got an impulse, we got a correction, and we have a channel. I don't think the hourly is going to give us much more information than that. So I think we can move on. Let's take a look at the dollar CAD. And Morton was asking for that, so it's an interesting currency pair. Let me renew this here. Let's take this all off. Yeah, it's an interesting one because it's moving so much. The CAD weakness really very strong, and it's a momentum that's been lasting very long. The last time it paused more than 6 candles was somewhere in here, or was it even here? Let's count quickly. No, I would consider that still part of the momentum. This one too. So basically, we've had momentum ever since this candle, which is February 2013. So we've had a momentum to the upside on the dollar CAD, according to my definition at least, for 3 years. And it's impressive. Obviously, um, accelerating even now at certain parts, right? Yeah, and Wei indeed says something very useful that I should add. And he says that the dollar CAD is an oil plus dollar play, and indeed the dollar CAD is very heavily correlated to oil. So, and oil of course falling a lot, so CAD it has a lot of oil. So if the oil price is not so much valuable, then they're going to get less revenue. So it's obviously less demand for CAD. So that's a very important factor indeed. It's very much correlated. Like the Aussie is also known as a commodity currency. And you can see price above the 272 target. So I see really from a monthly point of view a 150 psychological, and I see a 155 target, and I see here a top. That's what we can start thinking about. So we know that there's really nothing much blocking this at the moment. Oh, we got some bottoms in here. What is that? That's equal to 152. So, okay, 150, we have to keep an eye on 150. Let's drill down and go to the weekly. And I would like to, we can start fibbing this whole move up, but I think we can start with this fib here. 38.2 fib bounce, 272 target stopped, going past the minus 61.8. Amazing. So we got to move the fib yet again from here to here. That's the current 4-hour fib, but it hasn't stopped even on that. So it's just breaking above those fibs targets. And looking at the monthly and weekly candle, one would not expect a break very quickly of this week low. Let's look at the daily. Wow, it's just keeps on going, isn't it? Quite amazing. We had even the break of this resistance right in here when we hit the 272 target, right? Went to the 38.2 fib here, went up to the 2 target, bit of a wedge here perhaps on the daily chart you can see, and then the break of the wedge, pull flag and continuation. So it's just a massive momentum. And the question is, when are we going to get a bit of retracement? I think the same thing probably holds true for the daily. We've got to have at least 5 to 6 days not breaking this before we might get a bigger correction. But even after that bigger correction, it's just a question of time before the uptrend continues, I think. I don't see any reason why the trend should not continue after that bigger correction. But at this moment, the momentum has lasted so long and so much, I think that I'm a bit cautious of it. I think that, let's put a fib from here to here. Yeah, it's definitely difficult at the moment. Um, let's see. We got 4-hour chart. We got 1, 2, 3, 4, 5, 6, 7, 8 candles not breaking this. There's a bit of a mini head and shoulders here. You can see price making a bit of retracement there already, right? Small retracement on the 4-hour chart. But how far can that retracement go? Well, one way is putting a fib from here to here. And one of the targets that could be a bouncing spot is the minus 61.8 target. That could be a bouncing spot, and that could be an interesting short perhaps. The only thing that we have to realize is that the longs might, I mean, if this is a momentum that is finally over, we don't know, but if it is, then the upside might not go too far. But because this trend is so strong and the impulse is so strong, it still might make sense to look at the 23.6 fib and the target and try to aim for a potential trade there to the upside and see what kind of reaction do we get. Around 144. And as soon as, if price does bounce at that level, then I think it's important to keep an eye on, let's see, ways adding that there are demand zones. Indeed, there's a demand zone right in here. Yeah, you could even say this maybe, perhaps. I like this one more. And there's the 23.6 fib is basically equal to the top right there, indeed, of that demand zone. So that could be reasons for a long there. Now, what could happen is, though, price bounces and shows struggle here, and we got some kind of bigger head and shoulders going on, and price starts to fall again to the 38.2 fib, for instance, right? And does something like this, maybe like that, and it starts to break the next support trend line. So along here makes sense as long as I think that you find a decent point where you can move it to break even, so that you don't get caught in a bigger move down to the 38.2 fib. That's one scenario. Of course, it doesn't have to break. It can continue, keep crawling like that, and keep breaking this top. The 38.2 fib should be a bouncing spot again, potentially. And if that happens, and in the meantime, if it does go to the 38.2 fib, we got some kind of bull flag channel. After which, if that bull flag channel breaks, it's again a good breakout to the upside. Yeah, so the only thing is 23.6 is good, but be careful that this doesn't turn into a channel. Then we might have to wait for a later break and a deeper fib. If price doesn't continue, let's say it builds that bull flag, but the bull flag doesn't continue, or the uptrend doesn't continue within 5 to 6 days, then the bull flag might start to make a bit of a deeper retracement. It might go retrace not only to the 38.2 fib, but actually might start retracing a larger part of the swing. Might start going back to the 21 EMA. Because at this moment, the daily chart, let me put on the other template here. That's why this one is a bit difficult, because the daily chart just missed the 21 EMA here. So the last time it touched the 21 EMA is 28 days ago. I don't see any signs of divergence between these tops, at least. Let's see. Let me take a look at. There is some divergence on the weekly chart. Maybe on the daily it's unknown. And weekly is building, in fact, too. So I think it's still too soon to talk about divergence being a very major role here. And as Wei also said, oil is very important, and oil is in a very strong downtrend. So in any case, it could go back to the 21 EMA band, use it as support as it did here, and then continue with that uptrend. So if it breaks below the 38.2 fib, right? Let's say it builds this bull flag, right, that we're talking about. But it doesn't continue and break above the resistance within 5 to 6 days. Then price might actually already be at that bull flag, at the moving average, sorry, excuse me. Let's see. Depends where those moving averages will be, but I can see they'll probably be there. If a bull flag happens, they're probably already at the moving averages. No, so I don't see it breaking below the 38.2 fib, to be honest. Max 50, I would say, before we should break this top. So the question is only, like, will it bounce at 23.6 and continue, or will we get the bull flag and price will hit these moving averages, hit one of these two fibs, and then probably continue? I think those are the two most realistic scenarios, in my opinion. Bounce off 23.6 and continue right away, make a bull flag here on a 4-hour chart, hit the moving averages on the daily, and then still continue. If it breaks, for whatever reason, breaks below the 50 fib, but I think we'll have to see, knowing the moving averages, I think we'll have to see something like this. We'll probably see a dip above it. We'll see failure, and then we'll see a double dip like this, and then a move like that, and then we'll see a bigger breakdown. The moving averages will turn over to bearish, and we would definitely have to see kind of a failure here to break above it. That's when we could expect a bigger reversal, I think. But I don't expect it to happen at the moment. All right, let's take a look at the pound USD 50-minute chart. Richard was talking about that. Big wick, indeed. But I'm not looking at 50-minute price action signals. I would at least want a 1-hour signal. At the moment, this 1-hour candle looks strong. We'll take a look at a 2-hour chart. That's 1-hour chart at the top of the hour, sorry. Or 4-hour chart. On a 50-minute chart, I'm not looking at the price action, but I'm looking at time factor. I have 5 to 6 candles not breaking this top. But I also want some divergence on the 5-minute chart before a 50-minute time factor is a rule, or is of importance, I should say. So I think that there's no divergence here. I think price has to really, it's really a strong impulse. So more and more seems likely we need this to go back to the zero line, then have a one or preferably two actually break of tops. I don't think the 38.2 fib is probably going to be, you never know. It looks like it could go deeper at the moment, but you never know. Let's see. At the moment, there's not enough signal for me to, there's no signal confirmation here for a turn. Got less than a minute left, and we'll take a look at this hourly candle. If you're interested in more webinars, got tomorrow's strategy. We're going to take a look at strategy, same time, same place. Nennet is going to take a look at psychology, how to defeat the gambler within yourself. Wednesday evening at 5 p.m. GMT time. Thursday, 5 p.m. same time, we look at advanced methods, advanced trading methods based on Fibonacci. So that's this week's schedule. So we'll soon find out here what's going on. And it looks like a small wick. It's a decent wick, but it's not big enough for me to be convincing enough for a short. So I would not be shorting it on that. Our 4-hour that hasn't closed yet, and the 15 has no time factor yet, and the 5 hasn't divergence yet. So I'm still cautious of the shorts and still want to see how far this momentum to the upside can last. Alrighty, folks. Well, I guess we didn't look at all the pairs. We normally did Aussie, we missed. Let's take a look at the Aussie. Aussie's looking very bearish. It broke this bottom. It is in a strong down momentum as well. It broke this bottom within the 4th month. Still a very strong impulse on the monthly. Weekly strong trend. Recent triangle was broken, and the bottom of the triangle has been broken. And to me, as I said in the recap video yesterday, I think that the most interesting would be if it makes a zigzag up to one of these two targets, which could be interesting for shorts. Now, price eventually made the zigzag, going all the way down to the 88.6 fib, but not breaking the bottom, as I was saying yesterday, probably be a zigzag. Then breaking this trend line basically, and it's like a bull flag, impulse bull flag, getting a break, a counter trend break, in fact, part of a zigzag probably. I would like it to go to one of these targets, and I'll be hunting for shorts there for continuation of that downtrend. All right, if you have any questions, let me know. Otherwise, I think we're going to wrap it up for today. I didn't look at the euro yens and pound yens, but I don't think they're that interesting. Especially the euro yen not. Pound yen is in a big trend as well, though. I have to correct myself. And that could be a zigzag as well, like the Aussie. Right up to the minus these two targets, 272, minus 61.8. Could be interesting to find potential shorts there as it goes back into resistance within this downtrend. The euro yen does not look interesting because that's just a flat piece of price action. Alrighty, folks. Thank you so much for joining. Wish you all very good trading. Many green pips. Hope to see you in these webinars tomorrow, Wednesday, and Thursday. And see y'all soon. Cheers.